So good morning everybody and welcome back to my channel, and this is solely devoted for um, tips and tricks on how to beat the market using fundamental data. We will go on to technical indicators at a later stage, because as I've mentioned previously, in order for you to understand the market, in order for you to understand what moves the market, what drives the market, how to beat the market, and how to trade according to the events that transpire in different countries around the world, and to capitalize off that, okay? Pertaining to forex, pertaining to commodities, pertaining to indices, pertaining to stocks and shares, cryptocurrencies, etc. Right? So we are still discussing commodities in terms of how it is to incorporate that in your portfolio in terms of trading, because it is imperative in terms of how you want to achieve your results at a particular time. And we're going to unpack it as well according to age, according to social adaptive profiles pertaining to persons. All right. So we're going to continue to discuss or elaborate. Let me elaborate further in terms of commodities, how to trade it, and how to capitalize off the events that actually transpire. All right. So I would like to reiterate that in order for you to trade commodities, one has to pay attention to the futures contract. Now, we did discuss futures contracts in the previous videos, and the futures contract is basically a speculative price action, which is derived based off supply and demand in terms of commodities and how it is going to trade, right? So as I've mentioned before, you're not going to trade commodities for the month that you are in. It's always going to be a future. It's always going to be in the future, all right? So some commodities are already trading in March 2026. It's just the way it is. So in order for you to see how you are going to trade commodities on a monthly basis, the on the economic calendar, and I'm going to use investing.com again. You can use other financial reporting tools that are available. It's just that I like to use investing.com because why? I find that it is user friendly and everything is there on there. Everything is there for you to get that information that will enable you to trade from an informed perspective. So when you go onto the economic calendar, the same economic calendar where you would get the information about the economies around the world and the updates, the countries around the world, the updates and things like that, you will see that it's on a monthly basis. They're normally updated, all right? So you go to the economic calendar. On the economic calendar, it's going to basically just state speculative net positions, and it's going to list the cocoa, speculative net positions, gold, silver, etc. All right. So that occurs on a monthly basis. Okay. So these events are actually constantly updated and displayed on the economic calendar. So one can actually draw the conclusion on how to trade using the fundamental and technical data in order to establish how to place your trade. Now, the reason why I say fundamental and technical data, because if you are trading forex and if you are trading commodities, all right, and you're trading indexes, okay, it's very good to incorporate both, right? So to use your fundamental data and then go ahead and check the technical indicators, and I'm going to unpack that in a short while and explain to you why that needs to be done, okay? So if you are uncertain, all right, there are ways in which you can continue to trade, especially if you're trading forex, because as I mentioned, forex and commodities are very volatile markets, all right? But volatility breeds potential profits, because meaning that if you know how to trade using forex and trade commodities and you incorporate the fundamental data, you would be able to trade and beat the market, okay? So to mitigate the risk, all right, one can buy, but they can use a scalping technique, okay, to mitigate risk, especially if there's uncertainty in the market pertaining to commodities, pertaining to forex pairs, okay. So if uncertainty still persists pertaining to the market, let's say you don't want to trade and assume the risk, all right. However, let's say that you don't want to take the trade, all right? Um, because you think that maybe it's going to be too risky, all right, based off the technical indicators, okay? You can still open your position. You still can open your trade, all right? So what you can do is you can use a scalping method, a scalping technique, all right? So opening a large quantity of a trade and using 5, 15, 30-minute intervals, okay, to generate your potential profits. I'm just going to give you an example, all right? And then closing your position. So this can be achieved daily until you have achieved your objective in terms of reaching your financial goals, right? So for an example, when it comes to scalping, okay, so what you would do is when you go to when you are trading, right? Let's say you've opened your trade account, you funded your trade account in the on the CFD platform, okay? You've taken a leverage of maybe 1:200, all right? And now you are trading your forex pairs or you're trading your commodities, okay? So let's say you've gone ahead now, you've checked the fundamental data, and now you are checking in the technical indicators, and the movement is a bit erratic, all right? So what that means is, or maybe you're uncertain, okay, because maybe the contract was released, and now you are in a position now you're not sure exactly whether it's a buy, whether it's a sell, you're not exactly sure. So, and you want to trade because maybe you have a certain financial goal that you want to meet. For example, maybe you want to make $2,000 for that particular day, or maybe you want to make $5,000, all right? You are able to scalp, okay? You can scalp as many times as you like. You can scalp maybe 10 times a day. You can scalp 5 times a day. You can scalp as many times as you like in terms of that, especially when it comes to uncertainty pertaining to forex, pertaining to commodities, okay? You can find that sometimes scalping may be the best option for you to use if you are someone who is new and you're afraid and you don't want to liquidate your account, all right? So what you would do is you will go onto your trade account, you will open a position, you will see how the candlesticks are moving, right? Based on that, you will take your position. Let's say maybe you open a position and oil was, let's say for example, it's oil, okay? Or let's say cocoa, for example. So maybe cocoa was trading at 6250. As I'm saying to you now, when you are trading cocoa, you're going to trade on the whole value, not pips, all right? So pips is basically the last decimal point when it comes to forex. And I did explain it to you as well. So the forex, what is going to happen is you're going to derive your profits or loss based on the last decimal points. However, when you are trading commodities, you are going to trade on the whole value of that price action, all right? So meaning that the volume and lot that you're going to open, especially if you are trading forex and you are trading commodities, okay? So you can't trade have the same thing in mind or the same price or the potential profits in mind if you are trading forex and then you are trading commodities and you think no, you're going to open the same um, maybe volume of lot like how you have opened on forex, okay, and then now you want to try that with commodities, you will end up blowing your accounts, all right? When it comes to trading, especially when you're assuming your own risk, you've got to take into consideration the movement, the price action. You've got to take into the contracts when it comes to forex, when it comes to commodities, sorry. And then you've also got to take into consideration the volume of lot, which is extremely important, because what happens is you've also got to take into consideration that when you are having a volume of lot, all right, you also need to have funds in your account to sustain the trade in the event of the market moving against you. Maybe at that particular position that you open, maybe let's say you opened it in the morning and now the speculative net positions maybe was released, all right? It could be that now, and maybe there was also events that happened or transpired in that particular in that particular country, and now you find that that information has been released, and now that it sends the market in the opposite direction, and maybe you've opened your position and you don't have enough funds to sustain the trade because maybe you thought you will open a big volume of lots and you'll capitalize and you'll generate your potential profit. So as I've mentioned before, the market is very finicky. Sometimes it doesn't react well to prolonged events, all right, especially when it comes to political unrest, because remember, especially when you're trading forex, it's based off the government data that is released, all right? And that government data, it's also updated, all right, on a regular basis on the economic calendar. So it's very good as well whenever there is uncertainty and you want to trade, because as I've mentioned, volatility breeds potential profits. You're still able to capitalize, right? You can use the scalping technique and then you are able to generate your potential profits, right? I've had clients who have done live scalping with, and that was proven to be very successful, especially in terms of uncertainty, right? And then I would tell my clients as well, okay, are you ready? Because we need to make time as well. And I'm also going to discuss that and unpack it as well. Are you ready? This is what you want to achieve. You've highlighted to me. This is what you want to achieve. This is the goal that you want to reach. Now, what we need to do is you need to log on, and this is what we are going to do. So you're going to open it this, and then basically I will guide the client, all right? Then you'll find that it's a very good technique as well, because you can end up making maybe $10,000 for that particular day, all right? Just using scalping, not even being online for a very long time, can even be less than an hour. So it's imperative to include commodities as part of your investment portfolio. However, this needs to be monitored in terms of the value, right? As to mitigate risk, okay? As an individual who is 21 years old and someone who is 70 years old, the time difference that they have to catch up based off age in the event of the market moving against the person is huge in terms of the age gap, all right? So what I'm going to do is I'm just going to explain, okay? So also when we're speaking to our clients, it's very important to take into consideration the age, okay? Because you have someone who's 21 years old and you have someone who's 70 years old, or maybe 75 or 80, all right? Yes, people at 80 years old and 70 years old as well want to delve into trading as well, because as I've mentioned before, if you're someone who likes an adrenaline rush, trading can provide that for you, especially when you're trading CFDs and you're trading in your own capacity, okay? And now, someone who is 21 and 71 years old, they don't, it's completely different, okay? Because a 21-year-old has a lot of time to catch up in the event of making a mistake in terms of reaching their financial goals, all right? And a person who is 70 years old does not have that time, because they've already worked their whole life to accumulate a certain amount of money. So they don't have the they don't have the their risk is completely different as opposed to the 21-year-old, because they don't have time now to combat, all right, or counteract the incorrect financial decision if they have made it, okay? So another thing is that you've got to keep in mind, all right, and how you are trading. And I'm just going to explain to you briefly about when it comes to diversification of your portfolio as well, okay? So what I've noticed, and I stand to be corrected, is when commodities are up, all right, the price of stocks will go down, okay, and vice versa, right? So commodities tend to move in the opposite to other asset classes, okay? Hence, it's good to diversify with forex pairs, commodities, for example. If you are trading an exotic forex pair, like the Mexican peso versus the US dollar, right? One would need to potentially trade gold to diversify and mitigate this risk of potentially liquidating your account, right? Now, the reason why I'm saying that is that because the Mexican dollar, the Mexican peso, and the US dollar, it's a very volatile forex pair. Okay, so you cannot now try to go and trade. Let's say, for example, I'll give you an example like silver, right? Or even though silver is good to trade and have in your portfolio, it doesn't move the same as gold. So let's say maybe you wanted now, you got MXD, USD, let's use palladium, for example, or natural gas, Okay, so those commodities are quite volatile in terms of their movement. They can move now quickly, and you can actually liquidate your account very quickly. All right. So if you want to trade to mitigate risk, all right, and you want to achieve certain results at a certain space of time, like you can use the US dollar versus the South African rand, for example, and the Mexican peso versus the US dollar, and then you can also incorporate gold as well in your portfolio, because the movement of gold is not that high. And as I've said, there's a direct correlation with the US dollar and gold as well. So meaning that gold has the ability to revert back to the price that it probably was before. Gold and oil have that ability to go back. Okay. So the difference between trading and investing, trading is making a speculative bet, right? Based on the direction of the asset class. Hence, one can make potential profits off the buying or the selling of the asset class. Okay, so investing is owning the potential asset class or stock. Hence, one can receive dividends. So if you buy a stock, if you invest in a stock and you buy a stock and you own the stock certificate, you will receive dividends. However, when you are trading, you are able to you're basically speculating on the movement of the price action, and then you're going to derive your profits or loss of the underlying asset. Okay, so that means you can open a position on buy, then you can also open a position on sell, and you can generate your potential profits based off what is actually transpiring in terms of the economic calendar, in terms of IPO data, in terms of, now this applies to when you're trading stocks and shares according to when you go to the economic calendar and the earnings report, right? You are able to do that. Okay, so commodities are an important way for investors to diversify their portfolios beyond traditional securities, because the price of commodities tend to move in the opposite direction of stocks. Okay, so some investors rely on the returns from commodities during periods of market volatility. Right. So I'm just going to basically give you an overview, and this is from my point of view in terms of diversification, in terms of how you want to let your portfolio really work for you. All right. Now, I'm not telling you what to do. I'm just giving you a brief guideline, and this is, I stand to be corrected, but this is according to CFDs, right? So if you're trading in your own capacity, you are able to diversify according to age, according to risk, according to it's basically just a safer, let's just put it at that. It's a little bit more safer in terms of what it is that you want to achieve. I'll give you a brief overview. Okay. So when there is global uncertainty, okay, investors start ditching stocks and they gravitate towards gold. Okay, because gold is always been considered as a safe haven for investors. Right, now this goes back generations, because when markets have crashed, markets have seemed to be fallible, and countries' currencies have been eliminated, like wiped out, or they start again. um, they've always had to rely on gold to substantiate the value or give value to that particular currency, to establish how is $100, right? The only way it's going to be established is by having those gold reserves, right? So the US dollar also versus the Mexican peso, okay? As I've mentioned, there are ways in which you are able to scalp, right? So in the event of uncertainty in terms of the government, you are also able to capitalize, and you are able to scalp off that using the data, okay? In terms of market volatility, all right? And then you can have gold, you can trade gold as well, have that in your portfolio, or you could even have a stock as well, like Tesla or Nvidia, for example. You can even trade another forex pair, which is the US dollar versus the South African rand, okay? So commodities are somewhat a necessity to maintain returns at a faster pace, as the volatility of the market enables one to achieve their financial goals. Okay, so in terms of oil, all right, now I'm just going to give you a guideline in terms of oil and how it's impactful in terms of the market, in terms of trading oil, because as I've mentioned in my previous videos as well, oil, there are regular updates on a weekly basis in terms of the barrels of oil um, that is pumped, right? And every Wednesday you will find that. So if you're someone who's trading oil, you are able to have a look on investing.com and you will see that that is updated, right? So oil being pumped, all right? So there's 102 millions um, of barrels of oil that was pumped on a day-to-day basis in 2024. Now, this is according to the U.S. Energy Information Administration, right? So, as I've mentioned before, oil is liquid gold, right? Um, the only thing that's, in my opinion, all right, and this is what I've noticed in terms of the market, in terms of movement, okay, and because there is a governance, all right, when it comes to oil, there's OPEC, all right, which is the organization that governs the, let's just say, the supply and demand, right, in terms of oil. Okay. So a well-balanced portfolio taking into consideration age, one's social adaptive behavior, also liquidity in terms of what it is that you have in your account or in terms of your money that you want to start using to trade with or invest with, as well as time and also your financial goals. Okay, one has to ensure when taking this into account how to diversify your portfolio. Okay, so according to my perspective, I'm just going to give you a brief overview. Okay, so let's just say you're between the ages of 20 to 30 years old, right? And what it is that you need to do in terms of your portfolio, okay? How it needs to be in terms of a percentage value, all right? So forex, it would be maybe about 15%, okay, that you need to have in your portfolio. Commodities, about 25%, crypto, 25%, indexes, maybe about 20%, and stocks and shares, 15%, all right? Then you have someone who is between the ages of 50 to 65 years old. So 10% maybe to forex, 15% commodities, 15% crypto, 15% indexes, and 45% on stocks. Okay. The reason is because stocks is it does not move aggressively like the other asset classes like forex, commodities, crypto, and indexes. These tend to be a lot more volatile, all right? So remember, a 20-year-old and a 65-year-old, all right? It's basically completely different um, in terms of the time in which one has to catch up in the event of making a financial decision that could be to the detriment of yourself, because it happens. You'll find that some people have made bad investment decisions, and now they're already 65 years old. You cannot go back now and change that. So it's either you would go back to working, and who is going to hire you? So basically, you kind of view it as that, right? Now, the person who is 20 years old, or between 20 and 30, they can still make up that money because they are able to work again, right? So, for example, let's just go and discuss different asset classes, different instruments, okay? So, how to diversify, what it is that you would actually use in terms of if you are trading in your own capacity. I'm just going to give you a brief overview, okay? So, we have the GBP USD, the Euro USD, the US dollar versus the Mexican peso, USD JPY, USD South African rand, the USD, the ZAR, the USD CHF, which is the US dollar versus the Swiss franc, or the US dollar versus the Canadian dollar, or we have the Australian dollar versus the US dollar, okay? These are just examples of strategies that you are able to use based off your fundamental and technical indicators. So let's say, for example, there was political unrest and now you are going to capitalize off that, okay? So let's say, for example, you could trade the US dollar versus the Mexican peso. Then you could open a position as well on maybe gold, okay? And then you could open a position on the S&P 500, for example, right? Or maybe the NASDAQ. Then you will go maybe for a stock, okay? Maybe Amazon, Tesla, or Nvidia, right? And then maybe you could open Bitcoin or Ethereum, all right? But you would need to also have a look and see what is happening, because the volume of lot is going to play a very pivotal role, right? You cannot open all volatile instruments, volatile asset classes, because they can work against each other. So to play it safe in a volatile market, especially of maybe there's political unrest or the events that are transpiring, right? For example, you could open GBP USD, then you could open maybe Bitcoin, for example. Then you could open the S&P 500. Then you could open a position maybe on Amazon, Tesla, or Nvidia, for example, right? Or you could open, and you can include as well your gold, okay? Just to balance it out. It needs to be balanced, okay? These are all just examples, and this is from my point of view, right? I'm not giving you advice. I'm giving you just basic information in terms of how the market moves and how you would actually like to incorporate all that in order for you to capitalize off events and have a portfolio that is balanced, so that you are able to generate your potential profits of all different asset classes that are trading. Because like I've said, they operate differently in different when there are geopolitical events, they operate differently, all right? When it comes to the banking sector and interest rates and inflation, is going to operate differently, okay? Especially when the Federal Reserve is going to release important information in terms of the interest rates, you are able to capitalize that, right? Like I've mentioned, you are able to use, you could trade the US dollar and then you could open a position on gold and you could open a position on Bitcoin, because they all have a direct correlation. So when you want to trade, it's very good to do your due diligence. That is why the fundamental information is extremely crucial in terms of how you want to manage your portfolio before you even go to technical indicators, okay? So the amount can vary interchangeably based off the client's risk appetite, and this is just a guideline that I've provided in order for you to mitigate risk, okay? And not to overexpose your portfolio in terms of what it is that you want to achieve in reaching your financial goals, okay? So that is just my observation, right? And I stand to be corrected. It is different in terms of different clients and in terms of different accounts, different leverages, time, what it is that you want to achieve, in terms of also market movement as well, right? But these have proven to be a little bit more successful, right, in terms of your portfolio and balancing it out. Okay, so I hope you found this video informative, and please like, share, and subscribe. Let me know if you would like me to touch on anything further pertaining to different asset classes in terms of forex and in terms of commodities. And I would also appreciate if you could support my channel by just donating, so that we can keep this channel going. I have linked my information in down below in the description. So thank you for your time. Enjoy the rest of your day. Take care. Bye.